The S&P 500 was lower today, rejecting out of this zone that we've seen build over the past month. During the course of November, we've seen multiple rejections between the 6,800 and 6,900 zone. This has been a large area of resistance on the S&P 500, and over the last several trading sessions, starting to see a little bit of a rolling over in this zone, down 0.53%, closing at 68,1263. The largest gaming exposure, however, continues to be at this 7,000 strike. And so the main difference between the price action over the last several days versus the price action over these previous two major rejections is how gamma exposure is structured. This time around, instead of having the largest gamma exposure at the 6,900 level, the largest gamma exposure is now at the 7,000 strike, meaning that this is more than likely a buy the dip opportunity rather than a larger rejection accompanied by dealers selling pressure. So most of the dealer selling pressure is going to be above the 7,000 strike given the current gamma exposure setup. We continue to see rather large volume every single trading session. Today it was well over 50,000 contracts traded at that 7,000 strike. So these are out of the money calls and puts that are being bought and sold at the 7,000 strike. And in recent days, we've seen as many as 100,000 contracts being traded way up there at that level.
Thanks, Anthony. Let's take a look at QQQ, and I want to start with the weekly chart. And I did also want to note that QQQ saw net GEX decline today, but it's still positive, whereas we see IWM and SPX both showing net negative GEX. So there is some divergence there. But let's look at a few key levels that may prove important for QQQ in the next few days. First off, technically, we see today rejected a move past this whole moving average at 618 on the weekly chart. We need to get through that 16 area to tag this 620 GEX cluster and ultimately the upper dealer cluster zone, which is currently at 630. I have our net GEX selected on the chart. You can also see we have a large noteworthy GEX position at 590 for QQQ. Let's zoom in a bit further and take a look at the daily chart, reflecting QQQ's price being a little bit extended above the whole moving average so far. This gap is likely to be filled, but with the whole moving average rising, this may end up converging because of the whole matching price as it moves sideways. So there's a number of ways this gap could be filled. I switched to gross GEX so we could see positive and negative clusters at each strike. And you can see 610 does have a considerable amount of GEX. And so potentially a further decline to 610 may find some support. And that would very likely end up getting very close to the whole moving average as the whole moving average is rising.
Thanks, Sean. I wanted to point out that the metals markets are on fire once again. Let's take a look at silver, specifically SLV, the silver ETF, up 2.52% today, closing at 52.50. And just over the last several trading sessions, SLV has really broken out of this larger consolidation range that's taken place over the last couple of months. You can see the large gamma exposure at the 50 strike. That's been in place, of course, now for several weeks, with price running right through that level over the last 2 days. You can see our upper dealer cluster zone is right there between 50 and 51. So we're trading well above that level currently. We think this is a pretty decent area for some sort of slight pullback or consolidation just above that 50 strike. Obviously, gamma exposure is the largest at that 50 strike. And even if we scroll up the options chain and look at gamma exposure further up, we're starting to see gamma exposure growing at the 55 and 60 strike. And we even have more gamma exposure growing at even higher strikes, all the way up into 70. And this is a similar phenomenon as what we've been seeing in GLD, which is the gold ETF. We've been seeing some strength over the last several trading sessions. Of course, GLD not quite getting to its previous highs that we saw earlier in October, trading over the 400 strike. In this case, we think silver could actually be leading gold this time around, with silver making new highs while we see gamma exposure starting to grow at higher strikes on GLD at the 400 strike and above, as you can see here on our GEX chart. So flipping back to our SLV chart again, we're looking for some consolidation, maybe just a couple of days trading around the 50 to 52 area, maybe a slight pullback but I think this is a name that we're looking to add to our portfolios, potentially with a similar weekly income strategy as what we've been doing on GLD, potentially adding SLV to the mix as this breakout has begun unfolding. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by checking out our community Discord, absolutely free. Links in the description below.
All right, changing focus to the VIX. Let's look at the weekly VIX chart. We still don't have very much meaningful negative GEX appearing below the 16 strike, with the largest GEX cluster appearing as negative GEX at the 18 strike. And I noticed last week's low in the VIX was still higher at 1578 than the low from November 2nd, which was 1563. So even though it's a little sloppy here, we're still seeing the VIX maintain higher lows where it counts. Market bulls really want to see that 1563 broken, make this pattern start looking a little bit more dicey for volatility bulls. We're a little bit extended below the weekly hole, which is actually almost right at that 20 strike. Let's briefly look at the 2-hour chart for the VIX. Today saw a rejection of the 2-hour whole moving average, which is angled downward. This is a positive sign for market bulls. And we still have this downtrend with the Keltner channels occurring. So any bounce in the VIX is likely to fail in the 20 range, as long as the Keltner channels continue to be fairly good guides for where the VIX reverses and tops. Given that today's close was below the hole, we could see another retest of this 16 area before there's another attempt by the VIX to turn back up.
All right, next let's take a look at a trade that we are currently in on SoFi. SoFi has made a pretty strong move over the last week or so. We actually entered a trade back on November 24th, buying 5 of the December 19th SoFi 2830 call debit spreads at 71 cents. And if we just zoom into our screenshot from our post at the time, SoFi was trading at 27.05. One of the highlights for taking this trade was this big dip that we saw below the 50-day EMA, and we started to see some momentum and some buyers stepping in as SoFi dipped well below 25, but big gamma exposure at the 30 strike. And on this particular day, back on November 24th, there was also big volume at that 30 strike as well, with price trading at 27. And so this is one of our favorite setups, big pullbacks or retracements into major technical levels with gamma exposure and big positioning coming into the options market at these far out of the money strikes. And that's the exact same setup that we saw on SoFi back here on November 24th. So let's fast forward to today. SoFi is currently trading at $29.02 as of today's close. It was actually down 2.36%, 70 cents during today's trading session, but still well above the 50-day EMA, which is currently sitting at 27.65. And most importantly, we're seeing large gamma exposure at the 30 strike, accompanied with large volume in the options market. Nearly 50,000 contracts traded today at that 30 strike. So that does appear to be a target for market participants. You do see some negative gamma exposure here at these strikes between the 25 and the 30 strike. However, we're also seeing positive gamma exposure building above the 30 strike. And of course, if we go back to the end of October, we saw a couple of peaks here above 30, even getting near the 32 level. That ultimately resulted in selling pressure coming in, but we think there's another attempt here at getting above that 30 level, potentially up to 32 and above as we head into year end. And so we're going to continue holding our 2830 call debit spreads for the next week or two, and we'll see if we can get some further upside movement towards that 30 strike. That'll be a really nice profit if we do get back up above 30.
All right, my last one this evening is going to be analog devices, ADI. The daily and weekly chart show price being pretty well extended over the whole moving average and right at the doorstep of the upper dealer cluster zone at the 270 strike. It was a nice breakout from this consolidation that we saw that really went all the way from July into November. But the key here is not that price can't overshoot that 270 GEX cluster. It very well may, but we barely see any GEX above 280 at this moment. So bulls will want to see GEX grow above 280. Otherwise, this volume that we see at 245 and the big GEX cluster we see at 250 may end up being a target in the event of a pullback. That would represent just about halfway back from this spike. It would get us close to the zero gamma level, and it's not too far from where the whole moving average is. So a very logical spot for a pullback, and that 245 target looks pretty good as well.
And guys, you can still take advantage of our Cyber Monday sale. You can get an additional $400 off our yearly portfolio manager tier subscription. Use code Cyber Monday 25 at checkout. Obviously, today is Cyber Monday, so this promotion is going to be ending very soon. Definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies. And you can also follow our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.